Albert Einstein famously said, "Compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it." Compound interest refers to the concept of earning interest not only on the principal amount invested, but also on the accumulated interest. Over time, the interest earned on the original amount, as well as on the interest, can lead to significant growth in the overall investment. Einstein's quote emphasizes the power of compound interest and the importance of understanding it. Those who understand the concept and invest wisely can reap the benefits of compounding and earn significant returns on their investments. On the other hand, those who don't understand compound interest may end up paying more in interest over time, such as those who carry high-interest credit card debt or other types of loans. Investing in an exchange-traded fund, ETF, that mirrors the S&P 500 could be your path to riches. In this video, we'll explore how you can make $1 million by investing just $40 a week in an ETF that mirrors the S&P 500. So, before we start, please subscribe to our channel and don't forget to turn on the notification to keep the videos coming. What is an ETF? An ETF, or exchange-traded fund, is a type of investment security that tracks an underlying asset, such as stocks, bonds, commodities, or indexes. ETFs are traded on a stock exchange and can be bought and sold in the same way as individual stocks. By investing $40 each week into an ETF that mirrors the S&P 500, you are diversifying your portfolio with a basket of securities without having to buy them individually. ETFs typically have lower fees than mutual funds, making them an attractive option for many investors. Additionally, ETFs provide greater flexibility since they can be traded intraday and allow investors to go long or short depending on their goals. The first step in investing $40 a week into an ETF is to open a brokerage account. You can do this online with any of the major brokerage firms. Once you have opened your account, you will need to fund it. This can be done by transferring money from your bank account or using a credit debit card. Once your account is funded, you can search for an ETF that mirrors the S&P 500. You can search for ETFs by company name or index. When you find an ETF that you like, you will need to decide how much of your $40 to invest each week. It is important to remember that the value of the ETF will fluctuate, and you may want to rebalance your investments as needed. Once you decide how much of your $40 to invest each week, you will need to set up a recurring buy order. This will tell your brokerage firm to buy the ETF on your behalf at a predetermined interval. For example, if you decide to invest $40 every week, you would set up an order to buy the ETF once a week at the market price. Finally, remember that investing is a long-term strategy, and you should not expect overnight success. The S&P 500 has had an average return of 10% since 1962, but that doesn't mean that you'll necessarily see that kind of return every year. It is important to do your own research and be patient when investing in an ETF that mirrors the S&P 500. So, how do you get wealthy? If you invest just $40 every week into an ETF, you will be surprised at how much you could have by the end of the year. After 1 year of investing, you would have invested $2,080. This investment would have gained an average return of 10%, which would amount to $208 over the course of a year. After 1 year, your total balance would be $2,193. By investing the same amount after 5 years, your total balance would now be $13,287. That is a 600% return on your initial investment of $2,080. Fast forward to 10 years of investing, and you're looking at a grand total of $34,626. Again, that's 1,650% return on your initial investment. If you continue to invest the same amount of money for 50 years, you could be looking at a whopping total of $2,526,696. That is an incredible 121,000% return on your initial investment. This is a great example of how you can become a millionaire with consistent investments in an ETF that mirrors the S&P 500. Starting now can give you an edge and significantly increase your long-term returns. So don't wait. Get started on your journey to becoming a millionaire today. You should make sure that you are comfortable taking some risk before investing in an ETF. Also, keep track of all of your investments so that you know exactly what they are and how they are performing. It is also important to diversify your portfolio as much as possible to reduce risk. Research different options and make sure that you are aware of any fees associated with them before you make any decisions. Lastly, consult a financial advisor if necessary so that you understand the best ways to reach your financial goals. With dedication and diligence, you can make $1 million through small investments. And that's all for today's video. By taking advantage of the power of compound interest and the long-term growth potential of the stock market, you can turn a small investment into a substantial amount of wealth over time. Remember, investing comes with risks, and there are no guarantees of returns. However, by sticking to a consistent investment plan and focusing on the long term, you can increase your chances of success. If you found this video helpful, make sure to give it a thumbs up and subscribe to our channel for more valuable tips and insights on personal finance and investing. Don't forget to hit the notification bell to stay updated on our latest content. See you next Monday.